Welcome to The Explainer. So today, we're going to do something a little different. We're cracking open a professional technical analysis report to see what it can really tell us about a stock that's been absolutely flying, Western Digital. Okay, so on February 3rd, 2026, this was the price for one share of WDC. Now, by itself, a number is just a number, right? But in context, this is a big deal. It puts the stock right up against its highest price for the entire year. And that right there is the big question, isn't it? Is this thing a rocket ship that's just getting started, or is it about to fizzle out? To figure that out, we're going to play detective and follow the clues inside this report. All right, let's dive in. First things first, before we start looking for any red flags, we have to establish the facts of the case. And fact number one is that Western Digital's performance has been, well, spectacular. And our first clue is just how dominant this stock has been. I mean, think about it. Trading at over 94% of its yearly high tells you this isn't just some little blip. This is a powerful, sustained bullish trend that has everybody's attention. So we know it's in an uptrend, but here's the crucial part. What's the quality of this trend? Is it something fragile, like a house of cards that could collapse at any moment, or is there real, solid strength behind this climb? Let's check the instruments. To figure that out, analysts use a really cool tool called the Average Directional Index, or ADX. The best way to think about it is like a power meter for a trend. It couldn't care less if the stock is going up or down. It just tells you how strong the move is. Anything over 25 is considered strong. So what's WDC's score? A whopping 46.40. That's not just strong. The report itself calls this an extremely strong trend. This is our first major piece of evidence. It tells us this upward move has some serious muscle behind it. Now, another huge clue comes from something called moving averages. You can kind of think of these as the stock's center of gravity over different time periods. They smooth out all the day-to-day noise, and when the current price is floating way above them, that's a very bullish sign. And when you look at the data for WDC, wow, just look at this alignment. The price is just floating comfortably above its short-term, medium-term, and long-term averages. The report calls this a perfect alignment. And that tells you the bulls are in control across every single time frame. A setup this clean is actually pretty rare. Okay, so the trend is definitely strong. Now let's dig into the next piece of the puzzle, momentum. A trend is great, but it needs fuel to keep going. So what's actually powering this thing higher? You know, this is really what it all boils down to. Are people just talking about the stock, or are they putting their money where their mouth is and aggressively buying it? It's time to follow the money. Well, check this out. The trading volume is insane. We're talking 83% more shares are changing hands than usual. This is not some quiet, sleepy climb. This is a full-on rally with a ton of widespread interest from the market. Okay, but wait a second. Is this just a one-day wonder, a flash in the pan? Well, there's a tool for that called on-balance volume. It's basically a running total. It adds volume on days the stock goes up and subtracts it on days it goes down. A rising OBV is a great sign of consistent buying pressure. And yeah, the on-balance volume for WDC is huge. A number this big tells you this isn't just a fleeting thing. It suggests that big players, maybe institutions, have been steadily buying and accumulating the stock over time. The money flow is for real. So far, pretty much everything is screaming bull market, right? The trend is strong, the money is flowing in, but a good detective always looks for the other side of the story. It's time to hunt for any weaknesses or warning signs. And this brings up that classic dilemma. Could this stock be flying a little too close to the sun? You know, some indicators are like the tachometer in your car. They tell you when the engine is running really powerfully, but they also warn you when you're getting into that red zone. And probably the most famous one of these warning gauges is the RSI, or the Relative Strength Index. It basically measures the intensity of recent buying. When it gets above 70, analysts start calling the stock overbought, which is just a fancy way of saying the rally might be getting a little ahead of itself. So WDC's RSI is sitting at 67.07. See, that's getting really close to that 70 level. This is our first major yellow flag. It suggests that while the buying has been intense, it might be getting a little tired. And when you pull back and look at all the warning signs together, a clear picture starts to form. It's not just the RSI. Another momentum gauge, the money flow index, is in the overbought zone. The price is literally stretching the upper limits of its expected trading range. And maybe the real kicker, the acceleration of the price rise is actually slowing down. The car is still going fast, but you can feel the driver easing off the gas a bit. Okay, we've laid out all the evidence, the good, the bad, the bullish, and the cautionary. So after looking at all of this, what's the final verdict from the report? The report boils all of this data down into one single number, an overall technical score of 76.83 out of 100. And let me tell you, that is a really high score. It officially gives the stock a strong bullish rating. But, and this is a huge but, it's not that simple. The verdict is actually in two parts. Part one, yes, this is an undeniably powerful bull market. The trend, the momentum, it's all there. Part two, you have to be careful in the short term. All those warning lights suggest a minor pullback or a cooling off period could be coming before the trend continues. And that leaves us with the central challenge that every trader and investor faces, right? You had this incredibly strong long-term picture, but you also had these glaring short-term warning lights. How do you balance those two competing truths? Well, that's the real art of analysis.